Why property investing is still the best investment in 2026. Hey everyone, welcome to the Saam YouTube channel. We will be going on a bit of a journey together where I'll be talking about all things property investment, development, and finance, topics I've lived and breathed and loved for 25 years. If you're new here, I'm Saam Lowney, and today we're diving into the very start. Why property investing remains, in my opinion, the one best investment that you can make, even with all the challenges that we've been recently facing. Depending on where you are in life, it might be the actual very next best investment that you must make. Not one of the best, but the very next best investment that you must make. Now, I know what some of you might be thinking, but what about the Renters Reform Act? What about the interest rates? What about all the landlords selling up? What about all the landlord bashing? What about all the increased regulations? What about the rising running costs? What about the institutionalization of the industry knocking out all of the accidental landlords? And yes, we're going to talk about all of that. I'm not here to sell you a dream. I'm here to give you the honest truth about property investing in the UK, the good, the bad, the challenging, and the sometimes ugly, and why I still believe in it wholeheartedly. Just a quick note about my own journey. I've been in property since 2001, so 25 years now, and I started out as an estate agent, and since starting, I've been an investor, developer, landlord, lender, and now I own and run a property finance brokerage which helps property investors across the country like myself with all their funding requirements. So over this time, I've grown a property portfolio which spans London, Kent, the West Midlands, and the North East, which is where I grew up. I haven't personally bought any property in 2025 or early 2026 because I've been laser focused on providing the best possible service to the property investors and developers that we work with at Merryoaks. And that's been my priority. That's been my focus. And I absolutely love what I do. But here's the thing. I will be getting active in the market again later in 2026 and starting to buy again in 2027. That should tell you everything you need to know about my long-term conviction in UK real estate. There are a few philosophies that I follow, which I will share with you as we go. So grab a cup of tea, grab a cup of coffee, whatever you prefer, settle in, and let's explore why property investing continues to be such a powerful wealth building tool. Before we get into the video, I just wanted to ask, do you have a property funding requirement or a property funding problem that needs a solution? If so, reach out to me at Merryoaks Property Finance. Merryoaks Property Finance is a brokerage that I set up in 2021 to support SME property investors and developers like myself, like you, with all of your funding requirements. So if it's development, bridging, commercial, anything property finance related, the more complex, the better as well, because we're very used to those types of things. If you're a portfolio landlord, whatever you might need, let us know. Reach out to us. Let's have a conversation and see where we go. Now back to the episode. I really hope you enjoy it. So let me start with what makes property investing fundamentally different from almost every other investment out there. It gives you two streams of value simultaneously. It gives you the short-term income and the long-term capital growth. And honestly, very few investments offer both in such a tangible way. Let's talk about the short-term benefits first. When you invest in property, particularly residential property, you're generating rental income every single month. This isn't theoretical growth on a screen or on a spreadsheet. This is actual cash flow hitting your bank account every single month. It's money you can use to cover your mortgage, build your emergency fund, or even reinvest into your next property. That monthly income provides financial stability and can genuinely change your lifestyle. Maybe you want to buy a car and it covers the car payments. Maybe it funds your child's education. Maybe it simply gives you some breathing room and a budget and gives you something to save every month. And here's something people often overlook. Rental income tends to increase over time. Yes, there are regulations and market conditions to consider, but historically, rents generally they trend upward with inflation. They're directly linked to inflation. So when the inflation target is always 2% and sometimes it hits the dizzy heights of 10% as it did in 2022, your investment can and will most likely track that. So that income stream, it isn't static, it grows as you go. Now, let's talk about the long-term benefits, and this is where property really shines. Capital growth. Over time, property values in the UK have consistently increased. Yes, of course, there are dips and corrections along the way. Yes, some areas are more stagnant or more volatile than others, but zoom out over 10, 20, 30, 40 years, and the trajectory is very clear. Property values go up. What this means is that while you're collecting rent every month, the actual asset you own is simultaneously increasing in value. Now, you're winning twice, that means. You're getting paid to own an asset that's becoming more valuable over time. Show me another investment that does that as reliably. Now, you might say index funds, and that's fair, but there aren't many others, if any, that I can think of. But I'm sure you might let me know in the comments. But here's the sweetener. With property, you can easily benefit from leverage. If you put down a 25% deposit on a property, you're controlling an asset worth 4 times your initial investment. So when that property appreciates just by 5% in value, you're not making 5% on your deposit, you're making 20%. That's the power of leverage, and it's one of the most compelling aspects of property investing over the long term. Now, when we talk about property investing, we need to distinguish between residential and commercial property because they offer quite different benefits and they suit different types of investors. Residential property is where most people start, and for good reason. It's easier to understand because we all live in homes. We all understand that we need a roof over our head, and there's lots of demand for that. It's a human need. We know what makes a good property, what tenants are looking for, and what areas are desirable. The barrier to entry is relatively low compared to commercial. You can get started with your own residential property, for example, or a simple single buy-to-let property. The mortgage products for these sorts of things are very well established, and there's a huge pool of potential tenants because everyone needs somewhere to live. Everyone needs a roof over their head. That's such an easy concept to get your head around. Residential property is also more liquid. So if you need to sell, there's always demand for homes. There's always a chance that you'll sell it to a family or a first-time buyer or a young couple that are starting up. And the rental market is super resilient. Even during economic downturns, people need to live in places. In fact, actually, what happens when times are tough and people can't afford to buy, rental demand often increases, as we saw in 2008 after the credit crunch, and we saw in 2021 during the pandemic. So the challenges with residential: more and more regulation. This is something that we'll discuss in more detail later on in the video. But there's more hands-on management if you're dealing with individual tenants, and sometimes lower yields compared to commercial, though this can vary significantly by area. So if you're in the north of England or in the south of England, that can have a differential, but you must take all of this into consideration for sure. Commercial property, on the other hand, is a different beast entirely. We're talking rental units, we're talking office spaces, industrial warehouses, mixed-use developments. The benefits here can be substantial. Commercial leases are typically longer, often 5 to 15 years, sometimes with upward-only rent reviews. Your tenant usually is a business, which means they often take responsibility for repairs and maintenance. They call them FRI leases, full repair and insurance. And the yields can be significantly higher than residential, and for good reason. But commercial requires more capital to get started. The properties are more expensive in many cases. The deposits can be larger because the lower LTVs on your financing, and you need to have a deeper understanding of business trends, location economics, and commercial lease structures. Commercial property is also more vulnerable to economic cycles, so you have to factor all of this in. When businesses struggle, vacancy rates can spike. When vacancy rates can spike, those business rates, that's council tax that you need to pay, can sting you quite badly. So honestly, it depends on you. If you're starting out, residential is usually the low-hanging fruit. It's usually the way to go. If you've built up capital and experience and want to diversify, commercial can be an excellent addition to your portfolio. And here's the key: many successful investors have both. One of the brilliant things about property investing is that you can absolutely do it as a side hustle. You don't need to quit your job and become a full-time property developer. In fact, I'd argue that keeping your job while you're building your portfolio is often the smartest move. Your job provides stable income, which makes it easier to get mortgages. This is essential to think about. I've seen people leave their jobs and they can't get the products that they want, the rates that they want, because they have no income. Having a job covers your living expenses while your property investments grow, and it removes the pressure from making hasty decisions because you need immediate cash flow. With property, especially if you use a good letting agent for the day-to-day management, it isn't particularly time intensive. Sure, there are busy periods that you need to think about when you're searching for a property, going through a property purchase process, which can be time consuming, or dealing with a tenant change. But once a good tenant is in place, a property can largely run itself. And I know investors who work full time in completely different fields, and they spend maybe a few hours a month managing their portfolio. So some spend a bit more time if they're actively looking to expand, of course, and that makes sense. You've got to go to viewings, etc. But the point is, property is scalable around your life. And here's something important. Property investing is patient capital. Unlike day trading or flipping houses, buy-to-let investing rewards patience and long-term thinking. You're not glued to a screen, watching prices fluctuate. You're building wealth steadily, month by month, year by year, and this makes it perfect for people who want to build financial security without it consuming their entire life. It's an investment that works for you, not one that requires you to absolutely get out there and work for it constantly. For that reason, it's got some real good merit. Now, I promised you honesty, so let's talk about the challenges because they're real, and you need to go into this with your eyes wide open. First up, and this is the big one right now, the Renters Reform Act. This has caused a lot of concern, understandably, in the landlord community, and rightfully so. We've seen changes to Section 21 evictions, increased regulations around property standards, and more protection for tenants. Some landlords, particularly those with older properties or tighter margins, have decided it's just not worth it anymore, and they've all decided to sell up. So here's my take. Yes, being a landlord is more regulated than it used to be. Yes, you need to be more professional, more compliant, and more proactive. But is that necessarily a bad thing? The investors who are committed to providing quality housing, who maintain their properties well, and who treat their tenants fairly, they're actually benefiting from this because the standards are rising across the board. And this is the most important thing in capitalism, in my opinion, that the consumer always wins. The tenants are winning out. The landlords who are exiting are often those who are running marginal operations or can't even be bothered to adapt, and they run slumlords, let's call them, for want of a better word. And when they sell, it creates opportunities for professional investors who understand the new landscape, and there's the opportunity. Second challenge, interest rates. Let's not sugarcoat this. Higher interest rates have significantly impacted buy-to-let returns. Mortgage costs have gone up, which eats into your cash flow. And some properties that were cash flow positive a few years back are now breaking even or even slightly negative. But here's the thing. Interest rates are cyclical. They go up and they go down. Before we continue, a quick word from our sponsors, Merryoaks Property Finance. Merryoaks Property Finance is my finance brokerage, and I've been in property for 25 years. I started Merryoaks Property Finance in 2021, and we support investors and developers just like you, just like me, across the country with all of their funding requirements. So if it's bridging finance, development finance, commercial, buy-to-let, multi-unit freehold blocks, VAT bridging, HMOs, hotels, industrial, the whole 9 yards, we can support you with that. Please reach out if you have a funding requirement, you need support with it, you want to speak to one of our experts, you want to speak to me directly, please reach out, let us know, and I look forward to speaking with you soon. Now, back to the video. If you structured your investment correctly with the adequate reserves and realistic expectations, putting in buffers, you can weather these periods as I've done. Even if cash flow is tight, you're still benefiting from the capital growth and mortgage pay down over the long term. Third challenge, it requires intense capital. Property is a very cash intensive game. Unlike investing in stocks where you can start with £50, property requires serious money. Deposits, legal fees, stamp duty, refurbishment costs. You're looking at tens of thousands of pounds at a minimum to get started. This is a barrier for entry for many, many people, and I get it. It's worth acknowledging that for a moment. Property isn't available to everyone in the same way that other investments are. You need to save, you need to plan, and you need to be creative with financing. Fourth, it's not as passive as some people imagine. Yes, it's less active than running a business, but you still have responsibilities. You might say that I've been maybe a little bit contradictory here, because one time I'm saying it doesn't take up all your time, then I'm saying, hey, it's not super passive. It's somewhere in between is the honest truth. Yes, it isn't a full-time job, but at the same time, you can't just say, close my eyes and wake up and the bank balance is full and my balance sheet looks great. The reality is you do need to invest time. It's not 100% passive. So get real with that point ASAP. Otherwise, you're in for a nasty surprise. So yes, it's less active than running a business, but you still have responsibilities. Properties need maintenance. tenants need managing, either by you or by the agent. But if they call the agent's going to call you and you're paying for it. There's paperwork, compliance, tax returns. It's not a case of just buying and forgetting. And finally, there's risk. Property values can fall, tenants can default, properties can sit vacant, boilers can break, roofs can leak. You need to be financially and emotionally prepared for all these scenarios, or otherwise, again, you're gonna be in for a nasty shock. So given all that, who is property investing actually suited for? It's not for the faint of heart. Property investing is ideal if you are a long-term thinker. If you understand that wealth is built over decades and not months, you'll thrive in property. This isn't a get-rich-quick scheme. It's a get-rich-slow strategy, if anything, and that's actually a good thing, in my opinion. It suits people who are comfortable with leverage and debt, but responsible with it too. You need to understand mortgages, interest rates, loan-to-value ratios. If the idea of borrowing hundreds of thousands of pounds makes you uncomfortable at a fundamental level, then property is probably not for you, let's be honest. It's perfect for people who want tangible assets. There's something psychologically reassuring about owning bricks and mortar and being able to go and hug it like a tree. You can drive past it, you can improve it, you can see it, you can lick it if you really wanted to. For people who get really nervous about intangible investments, property provides that physical reassurance. It's definitely for you. Property investing suits the detail orientated. So if you need to research areas and understand yield calculations, vet tenants, manage compliance, and you enjoy doing that sort of thing, then this could be for you. If you're someone who enjoys doing the due diligence and gets satisfaction from getting things right, you'll enjoy property. Absolutely. It's also excellent for people who value control. With stocks, you have no control over the company decisions. With property, you choose what to buy, where to buy it, how to improve it, who to rent it to, and when to sell. That control is powerful. Who doesn't it suit though? If you need liquidity, property is challenging. So you can't sell half a house if you need £5,000 quickly. Property is illiquid and you need to be comfortable with having the money tied up for years. That is important. I was always told that property is a marathon, not a sprint, so you've got to take a long-term view, ideally. If you're risk averse to the point of paralysis, property might cause you stress. There are too many variables, too many things that can go wrong, and you need to have a certain resilience. If you're not willing to learn and adapt, you will struggle. The regulatory environment changes constantly, making conditions shift, market conditions shift, and you need to stay informed and adjust your strategy accordingly. And honestly, if you don't have the capital or the ability to raise it through mortgages, property investing simply isn't accessible for you right now. It's not fair, but it's just the reality. So after everything we've discussed, the challenges, the regulations, the costs, why do I still believe in UK property? Why am I planning to get active again later this year? Because the fundamentals in the UK haven't changed. The UK has a chronic housing shortage. We're not building enough homes to meet demand. Population is growing, household formation is increasing, and supply isn't keeping the pace. Basic economics tells us that what happens when demand exceeds supply, prices rise. This isn't going to change overnight. It's a structural issue that's been decades in the making and will take decades to resolve. As long as that supply-demand imbalance exists, property has a floor under its value. Secondly, the UK has strong property rights and a mature legal system. Your ownership is protected. Contracts are enforceable. This might sound pretty basic to you, but it's absolutely fundamental. There are countries in the world where property rights are very, very shaky, where governments can seize your assets, where legal systems are unreliable. The UK isn't perfect, but it's stable and predictable. Thirdly, despite the challenges, rental demand remains strong. Home ownership is increasingly difficult for many people. So we've got the rental generation. Mortgages are harder to get, deposits are larger, and many people, particularly younger generations, either can't afford to buy or choose not to because they want to be more of a digital nomad. They want to be a little bit more fancy free and footloose. That creates a sustained rental market. Fourth, property remains one of the most tax efficient ways to build wealth, particularly if your structure is done correctly. Yes, tax rules have tightened for landlords, but there are still legitimate ways to optimize your tax position that aren't available with other investments, and you should speak to a tax specialist to talk about how to structure your investments. Just interrupting this episode to let you know that in the show notes you will find a link to a free deal appraisal calculator. It's a buy, rent, refurbish, refinance calculator that I built. I used it over 550 times to find the first few high-yielding income-producing assets that I bought, and it gives you every single cost that you need in there to make it super granular. It also calculates your finance costs, and you can manipulate and tweak the LTGDVs up and down, the arrangement fees, the interest rates. You hit update model and it will tell you how much cash you are going to make on a monthly basis, as well as your return on capital employed. Now, back to the episode. And here's something I think is underappreciated. Property investing makes you a better investor overall. What? Why? Well, it teaches you about leverage, cash flow, tax, market cycles, and risk management. The skills that you develop as a property investor transfer to any other area of finance and business. Look, I'm not going to pretend the last couple of years have been easy for landlords. They really haven't. The Renters Reform Act has changed the game. Interest rates have squeezed margins. Some investors have been throwing in the towel, as I've been saying. But here's what I see. The weaker players are exiting, which means less competition for good deals. Standards are rising, which means the professional investors are being rewarded. And long term, the underlying drivers of property value, demand, limited supply, population growth, they're all still intact. I've been in this industry long enough to see cycles. I've seen periods where everyone thinks that property is overvalued and it can only go down. And I've seen periods where everyone thinks it can only go up. The truth is always somewhere in between, in my opinion, and the long-term trend is unmistakably upward. And that's why I've been focused on Merryoaks providing the best service to our property investors and developers across the country, because I believe in this sector. I believe in its future. And that's why I'm positioning myself to get back into the real estate market and investing by the end of 26 and through 27. Let me share something personal with you. I absolutely love what I do. I genuinely mean that. Working with property developers, helping investors find opportunities, being part of projects that create homes and build communities. It's incredibly fulfilling. You have no idea. I've wanted to be in properties since I was like 7 years old, and I'm still doing it today at the age of 42. But that's also why I haven't bought anything for myself in 25 or so far in 26, and I don't really intend to buy anything until 27. My energy and focus have been on serving the clients and partners at Merryoaks to the absolute best of my ability. When you're building something, when you're helping others succeed, sometimes you need to put your own deals on hold to do that properly. But make no mistake, please, I will be active again later this year, and I'm already looking at deals right now 12 months in advance, because I practice what I preach. If I didn't believe in UK property, I wouldn't be planning to put my own money into it again. I wouldn't dedicate my career to this industry, and I wouldn't be here talking to you. Property investing isn't just a job for me, it's a passion. It's how I've built my own wealth. It's what I recommend to people I care about when they ask me about building financial security. I hope that you find the same passion, whether it's in property or in something else. Because when you genuinely love what you do, when you believe in it deeply, that's when success becomes inevitable. So let's wrap this up. Is property investing the best investment? Well, for me, you know the answer. Absolutely yes. For you, maybe, maybe not. You decide. It depends on your goals, on your resources, on your risk tolerance, and your willingness to learn. But here's what I know for certain. Property investing offers a unique combination of income and growth. It's accessible as a side hustle. It provides tangible assets you control. And despite recent challenges, the long-term fundamentals in the UK remain strong. The Renters Reform Act has changed the game, but it hasn't broken it. Interest rates are challenging. Yes, they've probably gone back to normal if you ask many people, and they're cyclical. The barriers to entry are real, but they're also not insurmountable. If you're someone who thinks long-term, who's willing to do the work, who can handle the challenges and remain focused on the bigger picture, property investing can absolutely transform your financial future. I'm betting on UK real estate. This is where I live. It's a market that I know. I've been doing it for 25 years. I've traveled the world, and I absolutely believe that UK real estate is the best. And I'm planning to increase my own property portfolio later this year. And I'm excited about the opportunities ahead. If you found this video helpful, please give it a thumbs up. And if you disagree with anything that I've said, which I'm sure there are people out there for that, if you have your own property investing experience to share, drop a comment below. Let's talk about it. I read every single one and I love hearing from you. Subscribe to the channel, hit the subscribe button, hit the bell icon. And if you want more content on property investing, real estate strategy, and building wealth, it's all going to be here and on our Property People YouTube channel. And also, if there are specific topics you'd like me to cover in future videos, let me know. I've got a whole bunch of things that I want to talk about, but I want to hear from you as well. So until the next time, keep building, keep learning, and remember, the best time to plant a tree was 20 years ago, but the second best time is today. The same applies to property investing. I'll see you on the next one. Take care.